Let's bring on board Vineet Bhatnagar, MD, Phillip Capital. He joins us on the show right now from the sidelines of the Phillip Capital India Investor Conference. Vineet, hi, morning. Good to have you on the show. Tell us a little bit about the conference. What's the theme? What's the agenda like?
The theme is, of course, the mid-cap story, or the mid-cap good quality companies. We have an ensemble of 32 companies which are participating in this conference. It is meant only for institutional clients, and it's just a one-day event.
So which are the big companies you are showcasing?
The theme is mid-cap, so the names that are participating are Voltas, ABB, Future Retail, V-Mart, Gujarat Pipavav, Defence, Group Finance, and many others.
ABB also?
Yes.
Okay. Now ABB and Voltas, looks like you are bullish on engineering stocks.
I guess our view is to showcase a closer interaction between our institutional clients with the corporate, top management. That is the precise reason for facilitating this interaction. We have been positive as far as the outlook on the capital goods and engineering is concerned, and therefore the showcase does have many firms from the capital goods and engineering sector today.
Vineet, what are you sensing about the market? A fair amount of volatility of late. What's the sense that you're getting? Is this market in the mood to correct, or is it going to stay put around 8100 or peak up even further from here?
I think especially what has happened in the last two trading sessions, it's indicative of a longish bias than what one would have expected just on Monday, Tuesday this week, that it will go through the support of 7900 as far as Nifty is concerned. I think what is critical is that when the correction was happening, although it was steep on Tuesday, the correction was not actually followed by a lot of volume. On the other hand, you will notice that yesterday the way and the speed and the volume with which the traders and the market players came in with volume, especially in the F&O segment, to take long position on the Nifty futures as far as FII is concerned, was very, very significant.
Vineet, so my question to you is that if there was no cash market buying yesterday, what explains the 100-point surge, or not even 100-point surge, 140-point surge on the Nifty? I mean, it just cannot be out of the blue. I mean, someone was buying there and someone was really buying aggressively.
I think a lot happened in terms of the short covering of the leverage trades through the futures market is concerned. That came for not only the short covering but a net long position, as we were seeing as by the time the market came to a close. So that was an aggressive play. And although, as you are rightly pointing out, the underlying cash delivery volumes were not as significant or as remarkable as the rally in the market, one would only hope to see this to come through today and early next week, if this recovery is for real, and if 8180, the previous top, has to be taken off.
Why is everyone suddenly excited about owning two-wheeler stocks? I understand that two-wheeler dispatch numbers are looking up, but what explains a 40-50% surge in Hero MotoCorp, 100% surge in TVS, and pretty much 40-50% surge in Bajaj Auto?
I think the markets are not always as logical as one would like to see, especially when one starts pouring into your the earnings model and all the other modeling that we all want to do on our desktops. The markets actually behave much ahead of the really good news that were to come about 12 months from now, 18 months from now. So to explain as to why there was a disproportionate movement as far as the price momentum is concerned is very difficult for me. I think it is only the symptoms and the early signs of the dispatches, the delivery, the liquidity onslaught to continue from the West. All of this is just a combination of why people just go after some of the names, and I guess it is only a relief that the stocks that are rallying or that have rallied are also the ones that one would like to see in a portfolio when the recovery is for real and the numbers are much smarter than what they are today.
Are you excited about logistics space?
Yes, I think there is excitement, and of course the recent IPO listing of Snowman has only added some more color to it. Although there was some correction immediately after the listing, we spotted one of the other logistics company, ABG Logistics, that has also started looking a very nice portfolio buy. It has moved quite nicely in the last 6 months, but we still have a positive outlook on that company.
Vineet, at Phillip Capital, there seems to a clear shift when it comes to mid-caps with you guys towards the consumer or, for that matter, retail theme. You've got a buy on Trent, a buy on Shoppers Stop, Titan as well as a buy for you guys, and it's neutral for future retail. A bullish theme, and there's still money to be made there?
Yes, I think we do believe that if the follow-on in terms of the consistent and sustainable economic recovery were to happen over the next 12 to 18 months, there will be advantage that this space can have. We even have a buy on Bata India, which is looking still good. We have a target price of actually 1450 for top Bata India.
Vineet, let's talk about Nifty. On a scale of 1 to 10, what are the chances that we could see a print of 9,000 on the Nifty before Diwali?
I think it should not happen with that much speed and in such a short time. I would just say that on a scale of 1 to 10, 3. So it is really unlikely as I see the market today.
HDFC Bank, HDFC Limited, a block has just traded 11 lakhs. It's a big block, 920 rupees per share. Vineet, you mentioned that you are bullish on Growth Finance, and my question to you is that why are you bullish on Growth Finance? Because I was just looking at the valuations for Growth Finance. It's an expensive stock.
Oh, it's a very expensive stock. I think it is one of the most expensive stock in the segment for financials. I guess the reason why we have showcased Growth Finance in our Phillip Capital investor conference today is only because of the interest from the institutional clients that is surrounding this particular stock. And I don't think fundamentally speaking from our research. Fundamentally speaking, from a research point of view, we are very bullish in terms of where the target price could be from today. But it is just a good quality stock, very expensive though.
So Vineet, what are you sensing about the near-term mood of the market? In the next 1 month, do you think the market is going to be a little bit corrective in nature? Will we hang around the 8100 mark? What's really going to happen? Because October seems like a crucial month with a lot of key events and developments lined up.
No, I think I'm inclined to see that 8180, the previous stop, is going to be taken off, and I would imagine that in the next 1 month, therefore, Nifty should be in the region of 8300 to 8350.
At Phillip Capital, Vineet, you guys have got a really mixed review when it comes to IT. While overall you're positive on the sector, you've got a neutral on Infy and Wipro, but your top picks remain Tech Mahindra, HCL Technologies and TCS. Now, these stocks have already given great returns. Do you think it's worthwhile to ride the tide when it comes to HCL, Tech Mahindra and TCS, and perhaps, trade more of Infy and Wipro?
I think it's a way you would like to create a portfolio. When you look at putting your money as far as technology sector is concerned. So it is not really about absolute evaluation, but sometimes it is about relatively speaking, which are the picks that you would like to talk about as far as that sector is concerned, and that is the reason why we have a relative relative positive outlook on TCS, which is the leader as far as the whole sector is concerned. We are very excited about how they could use the cash on their balance sheet to deepen their presence in some of the geographies through acquisitions. We are very excited about how Tech Mahindra has actually evolved itself from a mid-cap to a full end-to-end service provider. We think that its expertise in telecom and also its ability to cross-sell all its services are going to provide a very robust earnings for the next 2 to 3 years, and therefore we think that a modest target for Tech Mahindra is actually 2600 even from now.
Vineet, you've talked about 8,300 on the Nifty. What do you think is going to take it sectorally higher? Is it going to be a more individual sector move, or do you think it's going to be a more across-the-board rally that we're going to see in the next 1 month?
I think it will be selective. I think there are still some pockets of weaknesses that may not benefit comparatively, even when Nifty were to make a new high, as we are evaluating sitting today. I think there is still some pressure that is visible on metals, for example, as a sector. That could be indeed driven by the dollar and the global commodity space as a whole, but we still think that there is some sign of weakness over there. There will also be some weakness in the second-tier public sector banks, which may not benefit because of the concerns about the balance sheet, capitalization, and also the NPAs. So there will be some pockets of weaknesses, and therefore one needs to be selective about how to play this momentum, whether in the large cap space or in the mid cap space.
What's your call on Reliance? Haven't discussed Reliance with anyone. One side is crude, which is correcting, which will have impact on GRM, and on the other side you've got gas, which could be the big trigger, or gas pricing, which could be a trigger.
I think the market has been waiting for that trigger to be the one which will take the prices higher as far as Reliance is concerned. We think that the dices are rolled in favor of a gas price related price momentum to kick in as far as Reliance is concerned. So we have a positive price momentum outlook on Reliance.
Why are you bullish on Trent and Shoppers Stop? And I just think through the e-commerce opportunity. My first question is, traditional retailers will take a whack, traditional retail business will die down. Does it make sense to buy into a traditional retailer at all?
I think it is a question of how this entire space really readjusts itself as the consumer habits to consume retail products, whether it is apparels or anything else is concerned, between an offline on-the-ground store model to an online model, which is now showing very positive signs as far as the pickup is concerned. It's actually more about how does the PBT fare out as far as the offline retail model and online retail model is concerned. So our sense is that there is an overall recovery as far as the retail consumerism is concerned. The benefit of that will obviously perhaps be a little more lopsided towards an online shopping as an experience, because it is seeing some signs of maturity in terms of an India common retail